I'm Will Reuter, and this is HBA After Hours, a podcast from the Home Builders Association of Greater Kansas City. Welcome to the HBA After Hours podcast, a podcast produced by the Home Builders Association of Greater Kansas City. As always, I'm your host, Will Reuter, and my partner in crime today, as always, is
Keith Sauro. How's it going, everybody?
Keith, I'm doing really good. It's good to be back on the podcast with you. It's been a little while since we recorded.
It has been a little while. It's like a summer break almost.
Yeah, well, it's not much of a break. It's just we've been busy with other stuff, which is good.
Right.
That means stuff's happening.
It is.
And you know what stuff is happening? We're recording a podcast, and we got a great guest today, so let's introduce him. What do you say?
We do, yeah. And this, by the way, today's podcast is sponsored by Owen Lumber and Phelps Engineering.
Thank you both. Well, our guest today is Cole Griggs, a mortgage loan officer with Academy Bank, recent first-time home buyer. A lot of good stuff that Cole's going to bring to the table, a fixture within the HBA. When you see him around at events, you're going to say, okay, that's the voice to the face I see everywhere. So, Cole, why don't you tell us a little bit about yourself? And welcome to the podcast, first of all. But tell us a little bit about yourself, your journey here, and what else people would want to know about you.
Yeah, for sure. Thank you for having me. Very honored to be on this lovely podcast. You know, I listen to it on every drive to work every morning. Just want to hear Will's voice. So excited to be here.
Okay, so the Lia-meter just went off. And that's fine.
And I snorked.
Yeah.
It was my first snork on the
Mine
podcast.
is an ego that needs to be stoked. So I appreciate that.
Well, no, I appreciate you guys. It is nice to be here.
I just wonder who his mortgage lender was.
I got to introduce him to some people.
Oh, that's right.
Sorry, we keep it.
It legally cannot be myself, actually. If you didn't know that.
Oh,
There's a point. That's a good
so I
point.
did use another local Kansas City company. So yeah, but yeah, thank you for having me. Excited to be here. About myself, my name is Cole Griggs. I work for Academy Bank. I've been in this industry now for 5 years. I love it. I love being in the home building industry. I know we'll talk about that more. But yeah, I'm excited to be here and to chat everything first-time home buying.
Well, Cole, I'm a notorious tightwad. I love a good deal. So this is great because this is basically a buy one get one when it comes to guests, because we're buying the mortgage loan officer and we're getting the first time home buyer.
We get both.
So we're getting two big topics for people that things that people are seeing on the news and wondering, okay, my son or daughter, whatever, they've never owned a home, they want to own a home. What are they going to go through? What are they going to face? And two, how are they going to finance it? Cole Griggs is going to answer both sides of that coin for us. So
that's right.
That's a really good thing. So Cole, what made you think, okay, I've been renting long enough, or I don't want to rent anymore? Walk me a little through your psychology there about how you found yourself, wanting to be the guy that is receiving the keys on the end of the transaction rather than the facilitating of the transfer of keys in your other side of your life.
For sure. So honestly, a lot of it was I've just, I've been a part of the HBA for a while. I've seen a lot of beautiful homes, and I get jealous on a lot of these parades. And I also get jealous of people that have built wealth through real estate. And I've always wanted to do that. So I've always seen what I put into, my apartment every single, month, which goes into every single year, how much I'm paying in rent. And I finally looked at that and I go, that sucks. After 6 years of renting, it was a lot of money, enough to make me really kind of just took the air out of me and decided, I've been doing this. I do it for a living. Might as well go do this for myself and finally get a house.
Practice what you preach, if you will.
And I got bullied a lot too, from people being like, you do this for a living and you're not buying a home.
You're not practicing what you preach.
Correct, yeah. And I'm super picky. So, I wanted a new construction home, and I was, to be completely honest with you, was going to wait until I had enough money to go buy what I wanted from, whatever builder I picked. And that was my plan. But then I eventually looked at those numbers and I said, how about I just buy something, pay for it myself, build some wealth on it, and then I have even more money to put into that new construction home whenever I'm down to.
So that's a good point, right? So you're thinking about building. You did build, right?
I did not build. I bought. I'm renovating my house.
You're renovating a house. Okay, so you didn't buy a brand new home. Okay, gotcha. Understood. Yeah. So what were you looking for when you were going through, and what were the key points? Because you said you're picky. So what were 2 or 3 of the points that you were really looking for in this house?
And my house does not have it, so I finally just found one that I liked. It kind of just hit me. I walked in. I would be annoying enough to walk into a house, and they say you can judge a house on your, like your 5 senses right away as you walk in. There were multiple houses I'd walk into, and I would either smell something, it just didn't feel right. And I would just walk back out and probably thoroughly upset my real estate agent in that process. New construction homes that I've loved the most about them, I've always wanted a, 3-car garage. I've always wanted a story and a half with a finished basement. And I've always just wanted to build the house how I want it, right? Everything's updated because my apartment's very updated. And when you walk through some, houses that are for sale that aren't new construction or newer homes, you got to do some of that stuff yourself. And finally, I was just tired of renting. I mean, I looked for a house for almost 4 years.
Oh, wow.
I was going to ask how long.
Yeah, I got burnt really bad one time. There's a development out south in south of Latha, blanking on the name of it, but had a house I really wanted. And at the time, it was mid 300,000s. And that same house sold probably now a year and a half ago for like $679. So same thing I wanted. It was a reverse 1.5, so not the exact model, but if I would have bought that, I would have been able to buy whatever house I wanted to at this point.
So as you went through this process, were there any surprises on a cost perspective?
I mean, just as every listener and as we all at the table can sit and know right now today, I mean, housing is becoming more expensive in Kansas City. I mean, people are moving here, the prices are rising. My scare was I wish I would have bought 5 years ago. I would have saved a lot of money, but I also understand watching prices rise every year that what else am I going to do? Keep renting and then pay another, whatever that number is, $50,000 to someone else's pocket and not mine. That's kind of what changed me to do it. I mean, there was, I guess the shock, if you will, and we'll probably get into this later, I assume, with some of the other questions, how much it costs to renovate a house, the cost of trades and products and all of that stuff. And at the time, that's what shocked me the most. I do this for a living as my profession. So I kind of knew the costs associated and what I needed to do to get there in order to buy a home. But definitely the price of what, materials cost right now and just renovations in general.
20% more, 30% more?
I just didn't realize how expensive it was, I told
no
myself,
context.
no context.
Right.
I mean, I have friends in the industry and just through the HBA and, bless the HBA because I've had a lot of awesome people help me with my house. Shout out John Rao. I bother him a lot and he's getting, he's not even renovating it. He's just helping me. So good human he is. Just the cost, whenever you call a subcontractor and I thought a kitchen would cost X amount and it turns out it's 3X what I thought it would be.
Yeah.
So just preparing yourself for those things and doing it the right way is definitely what shocked me.
Were there specific elements of that, say, kitchen reno that were particularly galling at the cost, or just because there's never anything that is less really expensive than what you thought it was? It either is what you thought it would be, or it's more, right? Was it the appliances? What is the countertops like? I'm curious, like, what was that thing that just really was the first like aha moment? Like, this is going to be a really big endeavor.
Flooring. Yeah, I would say flooring. I got a couple quotes and had a lot of awesome friends in the HBA, and I ended up just refinishing my floors because I thought it would be, I guess if you want actual numbers, I thought it would be $10,000 to $15,000 to do floors, and it turns out with demolition, you're talking, a lot more than that. $40,000 to do it. I mean, I'm talking a whole house too.
Right.
Sure.
House is 4,000 square feet. I wanted to do them everywhere. My house had mismatched carpets and LVP and, in every room it was different. So
yeah. Well, one of the things about costs is they rise like a rocket and fall like a feather, if at all. And so, that old adage, the best time to plant a tree was 20 years ago. The next best time was yesterday. Well, now it's today. And so, moving now and not necessarily waiting until the costs, quote unquote, come down, because there's going to be a lot of people waiting a lot longer than they otherwise would have. And I think, your story about potentially taking down that house, a few years ago, as opposed to what it would cost to acquire that same property today is consistent across the metro regardless of housing price. Oh, yeah. And so, the resale home that you bought and are renovating is certainly more expensive than what it cost to build it whenever it was built. And it was more expensive than it would have cost to acquire that property 7 years ago. So you're getting more expensive housing right now, and it's more expensive to fix it up. So the waiting is not necessarily going to be a cost saving in the long run.
And you're seeing that, and you probably say that when you're dealing with people in the mortgage space, right?
Yeah.
That say, I'm going to wait till the interest rates come down. And have you seen them come down?
I mean, we're seeing a little bit of help right now. I think just the unknown is still scaring a lot of people. We in our government, we've seen the idea of throwing out our federal, our Fed chair and stuff like that, and people just don't really know right now. They're definitely better than they were. I mean,
Right.
we're starting to get back under 7 consistently again, which is cool. But a lot of people thought we would see under 6 a couple of years ago, and now we're still at a high interest rate. Prices are still going up, but I don't know. The market's been weird this month. Like, I still don't really have a whole lot of, market with like the stuff that you guys send out as well, but data back to see kind of what's going on. But I mean, houses are kind of starting to sit a little bit. So are those interest rates causing that problem? Or just people, not buying?
Or is it summer?
Yeah, or is it summer?
Is it a real summer?
And it's probably a real summer.
COVID time,
yeah.
there was no summer. Now, I think they said, we were even talking about this the other day, European travel's up over 2018 levels.
Yep.
So you can't buy a house if you're not here.
True.
Not as easily as you can. If
No,
you were here,
that's right.
but it's not impossible.
You could. You could, yeah.
But, I think that, a lot of oxygen is given to these quote unquote rising inventory levels. And yeah, rising off of basically zero is
Correct.
going to be rising,
Yeah.
but we're still nowhere close to where we were from an inventory standpoint
Right.
pre-pandemic. So, I don't want people to be, concerned that they can't buy or sell a home because inventory is quote unquote rising. That is a static metric based on how long of a time period are you looking at. You got to look at, the totality of what a healthy market actually looks like. And from an inventory standpoint, we're still not there. It's
Right.
still a chronically underbuilt market.
Yep.
There's still not enough housing to go around by any stretch of the imagination, both on the rental or the for sale side of things. And so, ours is an industry that's trying to satisfy that intense demand and work ahead on the impending demographics that are coming our way. Because Gen Z is becoming a more prominent, participant in the home buying space. So, Cole, I'm curious, like from a generational standpoint, are you seeing a lot of activity in the younger cohorts? Are they making those attempts? Because we talk about housing demand. And I think that needs a little bit of nuance with it, because if you're just talking about people that want to buy a home and could make a payment, demand is enormous.
Yeah.
But when you talk about ability to pay and do a down payment, that becomes a completely different conversation. So, kind of give me your perspective as a mortgage professional, what you're seeing demographically walking through your door, looking to get into real estate.
For sure. I mean, I definitely have seen a higher influx on younger people for sure. And by younger, I mean on it like 21. I have 21, 22, 23-year-olds that are getting, whether it's gift of, down payment gift from family, or they have just worked and they have that money to buy. People are trying to not rent a lot more. And I mean, the 20 to 25 range, the 25 to 35, I just feel like it's still the culture shock for a lot of people. And those are a lot of my friends in that age range where, rent might be $1,750 to $2,250, but they're mad because they didn't buy a house back during COVID, prior to COVID, and now that rates were 2.5% and housing was cheap, and then now you just don't get that. So it's almost like
They got PTSD from what
Correct.
their experience
Yeah.
could have been, and they can't get off go now.
But-
But what's funny during COVID was people were complaining, thinking the houses were too high, right?
Yeah.
So it just seems like the time that you're in is the time that you feel like you've missed.
Yeah, no,
if
and
that makes
as Will
sense.
said earlier, the greatest time to buy is yesterday. I mean, I preach that 24/7. And I've had clients ask me about, how's your house? Well, I don't have one, and I'll tell them the truth why I don't have one. I want I'm very, very specific, and if you're able to go and buy someone else's house that needs a lot of work, good for you. I just couldn't wrap my mind around it, but then I finally did the math myself, and I was tired of paying for somebody else's living, I guess.
What would you have done differently? I mean, I understand, with the exception to buying 3 years ago, what do you think you would have done differently going through this process and what you've learned now for a new homeowner?
Yeah. You mean the process like I just went through? Is there anything I would have done differently?
Sure.
I honestly, not a whole lot. I mean, I got the property we found off market, so it wasn't listed, which was an awesome ability, getting a pretty good deal off market, especially in these, the market's still hot, like we were talking about earlier. Sure, things might be sitting a little bit more for a certain home, but is that home priced right? There's so many things to talk about there. Probably done a little more research on how much renovations cost prior to. Maybe I would have went for a cheaper house, or I would have spent $50,000 more on a more finished house that only needed like paint and trim work versus, you go back to the sticker shock for me. I have to put a exhaust vent for my new gas range in my house. That's expensive.
Yep. Which is different than it was when the house was originally built.
Correct.
Because the codes change. So you can't renovate to where the home was originally built at. You have to renovate up to current standards. And that can change dramatically between code cycles.
Yeah. And I thought it would just be a nice little couple holes here and there. And next thing you know, I got to rip 30 feet of drywall off my ceiling, to go in there and fill that in correctly. And it costs a lot of money to do so. I've got to move vents around and stuff. So I guess just doing more research on how to renovate homes and maybe talk to, my builder friends and stuff like that prior to. But I guess the only thing differently would have been, maybe a more expensive house that was already completed. But I also, now that I've gotten through majority of, the scary part of it, so finally swinging hammers and ripping things out and it's in shambles right now, I really like the decision I went with. I think I'm going to learn a lot more through this and, hopefully, we'll see the 5 to 10 year benefit from it.
How did your experience and your many years of experience in the mortgage space, right? How'd that help you through this process?
I just know what to expect from start to finish with it, right? So there's no surprises for me. Just hundreds and hundreds of transactions at this point. I know what can come up. I know what to look for, what problems there can arise, whether that's appraisal problems, finance problems. My loan officer loved me because I gave him a fully, basically underwritten all the documents, A to Z, everything's organized, and he's like, all right, we just need the appraisal back. And he knows me, so he knew it was coming. But I guess I already knew what was going to come about it, so I don't think there was going to be any surprises for me there. Other than renovation costs.
Right. We keep going back to that. Yeah.
Cole.
But you're making it how you want it.
Mm-hmm. Right, exactly. Well, I think, your experience about, would I have bought a more expensive home that required less finish or less modification, or a cheaper home that you would have then landed kind of at the price point that you wanted to. I think that's going to be the experience for a lot of people that are out there in the market right now, particularly those looking at the resale market. Because, we've had this thing called Home and Garden TV for a long period of time, and people have these assumptions about, I can renovate my whole house on budget in 30 minutes, because that's how long the episode lasts.
Yep.
And real life is way different. So our expectations as a home buying society are way off. And you're still paying top dollar for, a home because you're going to want it in a desirable area. Some people may want mature trees or proximity to a park or services or whatever those things are. And you're going to be paying for the ground that house sits on. And, you're going to be paying at the top of the market for that. And then you're going to want to put $150,000 in it because you want it to look the way that you want it to look or experience the way you want to look. And then your budget is completely out the window. I saw a metric earlier this week that for the first time in a long time, dollar for dollar, new construction is less expensive than resale.
Interesting.
It is very interesting that dynamic has changed, and it's due in large part because at least in the new construction side of things, you can control and predict for costs a lot more than if you buy a resale home, you get through the inspection, X, Y, and Z needs to be taken care of, but then there's always things that get missed. And they're surprises, and you find yourself in your Tom Hanks money pit situation, and all of a sudden you're going to crazy town. So, Cole, is there a?
I just thought of Richard Pryor Moving. Remember that movie?
Also very good.
You like it? We're taking it with us.
That's about the only part of the movie we can quote on this podcast because it's Richard Pryor. But Cole, were there any online tools or different resources that you use to kind of help either inform or decision make within your process?
Yeah. So again, and I want to kind of go back on this other question we asked earlier, Keith, about the unexpected cost. We'll go back there because I've seen that a lot with my clients that come through. But back to Will's point with the tools, I obviously have my own spreadsheets that I've created for myself that are like, just custom built for numbers and what I see and how to run like scenarios 5, 10, 15 years down the road, my unexpected costs and just that kind of stuff. Just doing a bunch of research, whether it's I Reddit or Google or anything about like unexpected homeownership costs, right? I've been building a nice little savings account for my emergency funds and stuff like that. But tools, Mortgage News Daily is always good just to kind of get a decent idea of where rates are. Every lender has different pricing out there. But they have a lot of really cool calculators on that website, right? So I've sent the website to some of my clients, but again, working with a professional, a great mortgage professional can be really good because, all of those questions are answered with that mortgage professional. So I think it's tough. That's why I was saying it might be a little tough with some of the original first-time home buyer stuff, just because I do quite a few transactions and, it's like a different idea behind it or a different site.
Did you do anything special with your mortgage? Did you buy points down? Did you do, anything?
Yeah, great question, actually. I did a 5-year ARM.
Okay.
A lot of people, especially first-time home buyers, are not, an ARM, by the way, is an adjustable rate mortgage. If
Thank you for that,
Sure.
yes.
And it's fixed for 5 years. So the term on the front of it, 5 years, means it's fixed for 5. And then on that 6th year, it adjusts based on the market. Everyone always freaks out about the word ARM in mortgage because they think of '08.
Right. That was very different time.
Very different. Right?
Everything related to housing references '08 in some form or fashion.
Right.
It's still,
Everything's
all
there.
the fear,
It's
all the
always-
gut,
the fear's
guttural,
always there with it, still to this day. But the ARM that I did, obviously, it's very heavily regulated now. It's not just, hey, are you good for it, Will?
Yeah.
Here you go. Here's $1 million,
Right.
buddy.
yeah, not even a handshake, a wink
Yeah,
that I'm
That's
good
how
for
it was,
Yes.
pretty much.
Yeah, ATR is a big thing in mortgage now, which is the ability to repay, right? So they're going to track everything, your pay stubs, your W-2s, your bank statements, and make sure you're actually good for it,
Right.
not just
Yeah.
a handshake.
I mean, the qualified mortgage rule post, Dodd-Frank really tightened up, and some will argue too tightened up
Yeah.
the mortgage lending
Yeah.
side of things.
That's
And
right.
so
Right.
on the underwriting side of things, that every mortgage that gets produced today is almost as much as you can guarantee a return on investment for the secondary mortgage market or something like that, because it is
They're not letting it go.
Yeah, they're
for any
not
less,
they're not
yeah.
relying on Moody's or the S&P to take a look at this and judge it. It's like, hey, if these guys with especially mortgage lenders with all of the scrutiny and oversight that they've got from both federal and state regulators, if they're saying, hey, we wouldn't let them do this, and in fact, we would throw them in prison if they did, if this was, off base because of, again, of '08 and '09, that there's a lot of comfort that these things can move forward. So that's why that adjustable rate mortgage, I think, is, it's got all of the baggage because it shares a name with its ancestor, but it's a completely different thing on the different side of the brain.
Right.
Than what it was.
And were you thinking, okay, great, I'm going to do this ARM, I'm going to get a lower rate now. Chances are in 5 years, I think interest rates could be lower.
I would say chances, but I used to say that 5 years ago because we thought chances were going to be lower rates then, right?
Right.
You just have to know what you're getting yourself into, right? 5-year ARM, I'm okay with it. My rate was almost a full % lower than what a secondary market 30-year fixed was. So when you're talking that kind of dollar amount reduction in your monthly payment, I mean, you're able to buy a little bit more house, and it made sense to do that. But I'm comfortable with it, and some people aren't, and that's perfectly okay.
Sure.
Yeah, and if you're privately or personally creating your own, pseudo escrow account where you're compensating yourself for the potential of a future mortgage rate increase, thereby a larger monthly payment, because that's how consumers think, right? You see your interest rate, that's fine. That's like the billboard for the transaction. But when you dig down into it, most consumers make decisions based on what it's going to cost them monthly because they know what they're bringing in monthly. It's how we shop for car insurance. It's how we shop for cars. It's how we shop for everything. It's, can I afford this on a monthly basis? If there's a threat that you may not be able to afford it based on your current income, and you're worried about what it's going to cost you monthly, prepaying yourself and setting that aside so that shock, quote unquote shock, 5 years later is not that shocking, is another way to protect yourself.
Yeah. I mean, I would say 100% yes on that. A lot of first-time home buyers, I think more or less, though, the media has scared people so much about interest rate that most people are just rate sensitive. That's
Right.
the billboard. The billboard's what they're going off of. So if you can bring me a rate that says 0.125% lower than what I have on mine, they're going to go with that person. But they don't talk about the payment as much as you would think. And that's how I do my business. I talk about payment only because that's what you're paying.
Right.
Doesn't
That's cash out of your account.
Right.
And
at the end of the day.
when the student loan repayment restarted, following the moratoriums during the pandemic, that's how I helped people correlate the interest rate on a mortgage versus the interest rate on their student loans. If they had 4 or 5 or 10, whatever student loans, it's like, well, what's the interest rate on your student loan? I don't know. You just know what you have to pay monthly. So your interest rate is almost inconsequential compared to what your obligation is on a monthly basis. So, in trying to unscare people about what the interest rate is, say, if you can afford the monthly payment that this product is associated with, this is what you're going to get, go for it. Because the interest rate's going to do one of 3 things. It's either going to go down, at which point you refinance. It's going to go up, at which point you made a good decision because now you got a lower mortgage rate than what's available, or it stays put, and you're no worse for wear. So I think it's, again, trying to demystify that fear that exists around what the interest rate is.
Yeah.
It also becomes desire, right? I always say, which would you rather have? Interest in something, a need, or desire? If you desire to have something, you're going to find a way to get it, right? So all these people that are looking for homes that have been on the fence thinking, oh, I'm going to wait for this. Maybe the houses are going to go down, the rates are going to go down or something. Yeah. It's not changing. If you want it, go get it. Think about the biggest devaluing asset you could buy, a new vehicle.
Correct.
And people spend crazy amounts of money on it, but yet they're worried about 2 points higher. It's unfathomable to me sometimes.
For something that is statistically so less likely to be worth less
Right.
than what you paid for it, or
It's
what it's
going to
worth
go
today.
up. It
Right.
should go up in value, right? We one time we didn't, and guess what? Now it's back, and then some.
Yeah.
So, are you glad you did it?
Once I move in, let's talk about that again. But yeah, I am.
You're still not in?
We'll ask you at the housewarming party that Keith and I are obviously going to be invited
Yes.
to.
Yeah.
Yes.
Yes. No,
Did you get a pool?
I did not. No, I'm okay without a pool. I want to have kids, and pool's not where I want to have little ones running right now. Yes, when it's done, I will be very, very happy. Now that I'm starting to see some of it, all of the old paint scraped and the, popcorn ceilings taken down and all the stuff that I wanted done, I'm starting to be like, wow, it's getting me happy again. But I'm not happy paying both rent and a mortgage
Right.
and Evergy's massive bills and the summer for a house blowing AC.
Which,
You'll
speaking
get
of
there.
popcorn ceilings, have you seen basically it's a Roomba that they hook up to the ceiling, and it's a robot that will take off your popcorn
No
ceilings
way.
that's hooked up to a vacuum, so you get no splatter on your floor, and it basically will just take off all of the popcorn off of your ceiling.
That's brilliant.
I'm telling you.
Because that is the messiest thing ever.
It's
Oh,
gross.
my house is in shambles because of it. I mean, it's everywhere.
you need a Roomba.
I need one, yeah.
I mean, you think about that. It's brilliant because popcorn ceilings, of all of the things that may come back into form and fashion,
That won't be
ain't
one of
gonna
them.
be ain't gonna be
That won't
popcorn
be
ceilings.
one of them.
Someone told me during this process that popcorn's coming back. And I said,
Okay, they're trying to
"There's-
will that into
there's
existence.
no
That's-
way.
That's because he didn't want to clean the ceiling.
Probably.
He didn't want to take it down. That's
Well,
right.
that's because he's trying to get more people to put it in because he owns one of those ceiling windows.
That's it. They're going to do it. Yeah. Oh my gosh. Speaking of Europe, I got to tell a funny story. So, actually, me and my wife were in family. We're on a family trip to Europe. I'm in Florence, Italy, and we just watched the sunset, and we're in this place grabbing a bite to eat, and I hear Keith, and my wife goes, "Oh, you're kidding me!" And I look up, and who was it?
It
was
was
Cole.
me. It was me. Out of all places,
What are the chances?
Yeah. What a beautiful city.
It was a great city. Did you enjoy the trip?
It was awesome. It was so great. I went back that fall.
Did you really?
Yeah, I went to
kidding.
go see the Chiefs play in Germany, and when you're in Europe, it's like super, super cheap to
Oh
travel.
man, that's
So,
awesome.
Good old Ryanair, $42 got me back to Florence, Italy, and then I came home from there.
Really? That's
Yeah.
great.
That's pretty
It's a
cool.
small world
Yeah,
sometimes,
yeah.
right?
And also, I went over there with my girlfriend, and she was also equally like, "What in the world? No way!" Because she gets mad at me when I go in public, like we were talking about before the
When you
podcast.
know what we
I
do,
just
we know a lot of
I
people.
love talking to people. People
Me
are
too.
awesome, and everyone has great stories. And so out of all places, Florence, Italy, I find Keith in a little pub, and Took a picture, and the rest was history.
And that was it. We forgot till I saw you today.
I thought, yeah. I knew it was you. I just wanted to confirm.
Well, now it's going to be super awkward when you don't get invited to his housewarming party.
That's right.
Because now you've got this international connection.
We have it, yeah. So just let me know when, and I'll be there in my Speedo for your non-swimming pool.
I mean, you can come in a Speedo. I just no pool in a Speedo might be a little
awkward.
So this is on the record. You realize this. We're being recorded. If you're telling him to wear a Speedo to a pool party that doesn't exist.
It would look like a string on a ham. That's all I'm saying.
Oh my God. You know, there's sometimes you and I have lamented not having cameras in this, and then this is one of those things where everyone's got their own visual now, and we've ruined it.
Glad I could paint a picture.
Oh, gosh.
And thus ends my HBA career as a podcaster.
You went out in a blaze of glory.
That's right.
Blaze of something.
That's right.
Goodness.
Cole, we do need to end on some actual topics that people are going to care about, regardless of the visual of Keith in a Speedo, and because based on the comments, I assume we're going to get, that's not going to be helpful in the home buying process. I don't know.
You don't know, right?
But you never know what
never
piece
know.
of information may or may not be available to you. But the average age, Cole, of a first-time home buyer in the United States today is 38 years old. The median age of a home buyer, period, is 56.
Wow.
In your experience as a first-time home buyer that is dragging down that average, so thank you, of the first-time home buyer. But what are some of the things that can be done to help work that number back? Is it just an increase in supply altogether? Is it more available mortgage credit? Is it a total readjustment of expectations on the part of the economy and society writ large? I'm just curious because, as much as we talk about the issues that exist in housing today, we also want people listening to this podcast and even our own membership and even ourselves to better understand that, hey, there's light at the end of the tunnel. If we can do X, Y, and Z or, reassess, A, B, and C, everything's going to be okay.
Yeah. Again, the age is, I feel like it's starting to get younger again, which I think will help change that number for sure, just because I think people, at least the, 20s right now are tired of the we're going to wait. So some people are taking action on that, some aren't. But I think the number one thing is going to be knowledge. Knowledge about the mortgage process itself is more important. I mean, obviously the home buying process is very important to have knowledge on. But speaking with a mortgage professional up front to have realistic expectations, because that's where I think people lose it is you want to buy a house and, sure, when we moved here from Indiana in 2009, so, I guess a good time to think about here. Actually, was it 06? Was it somewhere, 08, 09. My parents bought a house that is like 3,900 square feet for $215,000. And that house is probably, I don't know, they haven't sold it, but if they would, it's probably $500,000.
Right.
So I think that's just still hard for people. It's kind of like the jealousy factor, right? We talked about it earlier.
Mm-hmm.
I really wish I could have bought back then, but I didn't. So just having realistic expectations. Pricing's not going to just fall off the planet. We're in Kansas City. We're not in the coasts. We have a very stable market that, Will, as you mentioned earlier, we still need we need more housing. We don't have enough of it.
Right.
Do I think people are going to have more options as time goes forward? Yes. They might see a little setback here and there, maybe a certain price point, but I don't think we're going to see what other places see. We still need more housing across the U.S. in itself, but especially in Kansas City. So I think knowledge about everything and expectation.
Well, that's great. I wish there was a podcast related to new home construction that people could tune into to gain.
That'd be a great idea, wouldn't it?
We're doing some product development here on this podcast about new home construction in Kansas City. Wait a
Whoa,
minute.
wait.
We're the sources.
You came up.
All right. Well,
that's too great.
Cole, it's been great visiting with you. I'm curious, is there anything that we didn't ask about that you would want people to know or would want Keith or I to know, or anyone else that might be listening that we didn't touch on?
No, not really that I could think of. I know I did mention something I want to go back on real quick before we wrap up, was the most unexpected cost, because I don't think it's fair asking me that knows about every cost that goes to a transaction. most clients of mine or people that are first-time home buyers, the unexpected costs are actually going to be things like inspections. A lot of people don't realize how expensive inspections are, how expensive an appraisal is, because we'll say, well, what are closing costs? Oh, it'll be anywhere from $5,000 to $7,000 on a typical home. They're like, for what?
Yeah.
What are you charging me?
Right.
So closing costs. So if anyone's listening that needs help with that, speak with a mortgage professional, a vetted mortgage professional at that, to make sure that they can go through those with you. Because once you have the entire upfront expectation set, the process itself really is not that bad.
And speaking of that, why don't you tell everybody how they could reach you as with Academy Bank and what you do?
Yeah, for sure. So easiest way to contact me would be my cell phone for sure, which is going to be 317-446-0904. And then you can always find me online at, it's pretty simple, it's www.colegriggs.com. So
Thanks.
If you can't get a hold of me off of that, something's wrong.
I have one last question. How was your realtor during those 4 years?
So luckily, her and I do a lot of business together. And I wasn't, I know one of the things we were potentially going to talk about is how many houses did I see? I got pretty discouraged there for a little bit, and I was very, very busy with work. So I don't think I saw as many as you think it would be. I probably all in probably 5 to 10 houses a year. So I think she was okay.
Good. Well, congratulations. You finally found it.
We did
That's
find it.
great.
I'm excited.
And soon you'll close. I mean, move in, I should say. You close.
Yeah, we already
Move in.
closed. Sadly, we're
Move in.
paying for it.
You got
Yeah.
it.
Well,
Right.
Cole, we appreciate this conversation, and we appreciate all of our conversations here on the HBA After Hours podcast. But we also want to have an opportunity to discuss the things that you, the listener, want to learn more about. So please do drop us a line at kchba.org/podcast. Ask a question. Let us know if there is a topic you'd want us to cover, and we'd be happy to explore possibly doing that.
Yep.
Thanks again to our sponsors, Owen Lumber and Phelps Engineering, for the conversation today. And again, Cole, Keith, always a pleasure to be with you.
Glad to be here. Cole, thanks a lot for your time.
Appreciate it, gentlemen.
All right. Have a good one. Thanks, everybody.